Hello and welcome back to my channel. In today's video I'm going to talk about my problems with Dave Ramsey. But before I get to the problems, let me first say that I think overall Dave Ramsey has done a lot of good for the world, and I think that he's helped out millions of people, such as having an emergency fund and paying off a lot of your debt. And I'll probably even make another video on all the things that I agree with Dave Ramsey on. But for this video, I'm going to talk about 3 topics that I disagree with Dave Ramsey on. The first one is the kind of obvious one. It is credit cards. So if you don't know Dave Ramsey is a very, very strong believer in not ever having a credit card. And he pretty commonly quotes saying that no one becomes a millionaire based off getting 2% back off a credit card or things like that. However, I strongly believe that if you use a credit card responsibly, it will help you out. I do realize that there is great danger in credit cards, and if you misuse them, you will easily get into a lot of debt. However, if you use a credit card properly, you can save $500 to $1,000 per year if you have optimized several different credit cards for different things. So I think as long as you can prove to yourself that you can be responsible, having a credit card will help you and not hurt you. And having credit cards will also help out your credit, which will help you get a lower mortgage or any other type of loan you got in the future. However, Dave Ramsey doesn't care about that because he doesn't believe in any type of debt really, so he doesn't care about what your credit score is. The second thing that I disagree with Dave Ramsey on is that Dave Ramsey thinks that while you're paying off all of your debt, you should pause all of your investing. So if your company has, let's say, a 5% match, or if you want to put money into your Roth IRA, Dave Ramsey thinks that you should pause all of that until you have paid off all of your debt and then kind of accelerate the investing. And he says this because he thinks you should really get all of your debt paid off within probably 1 to 2 years for most people. So he thinks that the losses are minimal and that it is worth it to get rid of all of the debt. However, from my point of view, if your company has a match, you should always invest in that because I see it as free money from your company. And I would probably continue investing into a Roth IRA while you're paying off your debt as well, because of all the huge tax benefits that you could get from it. Now, I do understand if you were to say don't invest other than those 2 things. However, a company match and a Roth IRA are just great opportunities for wealth building that I don't think you should pause. But I would probably pay off all of the debt, especially if it's over 3 or 4% interest, before putting any money into, let's say, a normal IRA, or just putting it into normal stocks or ETFs. So if you've made it this far into the video, please consider subscribing to my channel for more daily videos on anything and everything to do with money. And if you like the video, leave a like. But back to the video. My third big problem with Dave Ramsey is probably something that relates to almost nobody, and probably almost nobody has even heard of, but it really doesn't make sense to me. And that is that Dave Ramsey thinks that you should only buy investment properties if you can buy it with cash. So this just isn't possible for most people. So if you own a house, and even if you have it all the way paid off, and you want to buy an investment property to rent out, but you don't have this much money in cash, he thinks that you should wait until you can buy the building in cash before you can get it. Now, on the other hand, I think you should pay off a good portion of the rental property. I don't think you should just put 10% down on it, but I think saying that you shouldn't have any mortgage on it is just unrealistic. And for a lot of people, if they bought a house in cash, that would mean that their assets wouldn't be diversified at all. Let's say they put $300,000 into an investment house, and then they have their own house that's also $300,000. So that's $600,000 that they would have invested into real estate. And they most likely would not have too much money in other things such as the stock market. So I think they would be too reliant on the real estate market doing well. So let's say if the real estate market went down, then pretty much their whole portfolio would go down because they're not diversified at all. So in review, I really like Dave Ramsey. I think he's done a lot of good for the world, and I agree with a lot of his things, and I'll even make a positive video on him in the future. However, my 3 major problems with him are: 1, his disagreement with credit cards that I do not agree with. The second one is that he thinks you should completely pause all investing even if your company offers you a match while you're paying off your debt. And to me, this is just giving up too much money. And then the third one is that he thinks you should only buy investment real estate if you have the cash to buy it. And I personally think you can take out a mortgage on an investment property. However, I still think you should pay off a large percentage of it, but I don't think you have to pay it off in cash. So now it's time for everybody's favorite segment, the joke of the day. Joke of the day. Joke of the day. Do-do-do-do. The cashier said, "Strip facing me." By the time I knew he was talking about the credit card, I was already naked. So thanks for watching. If you'd like to see more daily videos on any and everything to do with money, please subscribe to my channel. If you like the video, leave a like, and if you have any comments, leave a comment below, as well as if you have any ideas for future videos. Bye.